Alrighty, it's time for an update on what's going on with the Fed, interest rates, and the economy. Forgive the noise in the background. That's something that we're just going to have to deal with for the next couple of days. Having an issue with the air conditioning, and in Florida, it's too hot to turn it off, so I'm just going to have to deal with it. But anyway, for those of you who don't know, the Fed funds rate is currently at 4.75%. It is still at 4.75%. That is an increase of, let me think, an increase like 19-fold, because they started at 0.25%. So interest rates have gone up 1,900% over the course of the past year. Let it sink in for a minute. That's not normal. That's not something that would ever happen in an economy with market interest rates. Let's put it that way. And it's not something that any business can be prepared to deal with. It's not something that any industry can be prepared to deal with. A 1,900% increase. It's one thing if interest rates double. It's one thing if interest rates triple. But if interest rates go up by a factor of 19, I don't see how the lights are even still on across America. I don't know how the country is still operating. And so at this point, I would have thought that something would have broken a long time ago. The fact that we're all still alive and interest rates are as high as they are, mortgage rates are hovering around 7%, depending on, credit score and, who your lender is and whatnot. I can't even comprehend how expensive it would be to buy a house in my area in this current environment. I think, average, sort of all right house on a crappy street hovering around $350,000 at the moment. I should have done the math, but honestly, I don't have to do the math on how much your mortgage rate would be at 7%. It's unaffordable for anybody. Nobody can afford that. Unless you're like a 2-income household, both with 6-figure incomes. And then you've got all the businesses with their revolving lines of credit. You've got credit card debt. Everything is up. Everything is up astronomically in terms of interest rates. And yet we're still just trucking along. So at this point, I'm just going to throw out anything that I know. I'm not going to play the game of, we must be near the end. I've done that too much. I'm wrong all the time. So I'm going to have some humility. And at this point, this is an interesting experiment. I want to see how far the Fed can take it. I want to see the Fed continue to raise interest rates until something really breaks. Until the economy comes to a standstill. Just to see what that point is. Because this is the only way that you find out about stuff like this. You got to test it. Economic theory does not tell us at what rate of interest you will prick the bubble. I would have thought we would have hit that point already if you'd just asked me. There's nothing to go on there other than just my gut. I would have thought, hey, 5% was enough to kill the bubble back in 06. I would think 4.75% would be more than enough to kill the bubble that we're in now. Because, conventional wisdom on, at least in my sort of clique of economic thought, is that we're in a much worse bubble now than we were in 2006. Economically speaking, that the economy is much more dependent on low interest rates than they were back then, because we have had, over a decade of low interest rates. You would think that that is just the environment that the entire economy has priced in. And if that is disrupted by the Fed raising interest rates by 1,900%, then the result should be an economic calamity. And yet that has not happened as of yet. It's not materialized. And we have no good answer for why that is. Now, I know that in some parts of the country, the real estate market, at least, is starting to cool down, which, I mean, again, it would make sense. 7% mortgage rates, who the hell can afford that? But in my neck of the woods, that hasn't happened. In my neck of the woods, rents are not going down at all, and they're still cranking out these rentals, these apartment complexes. We never had apartments where I live. I mean, there were very few. I mean, there were some, there were like a couple of apartment complexes, and they were 2 stories max. Now we're getting 5-story apartment buildings everywhere. And, they're just as far as the eye can see. They're building 5-story apartments. And every single one, as soon as it's completed, rents out immediately and has a waiting list. And the rents they charge for these apartments are higher than, what you, at the time when they started building these apartments, you could rent a house cheaper. Not anymore, though. No, you can't rent a house for less than $3,000 these days, but it was, you could rent a house for around $2,000 back then, and they wanted, $1,800 for like a 1-bedroom apartment. It seemed nuts, but people moved in them immediately. And every house, no matter how ridiculous the price, it seems to sell. Houses that were priced ridiculously a year or 2 ago now look like steals. And so, I don't know when, my local real estate market's going to start to cool down. And, considering real estate is all that we've seen really move, it's not like stocks have fallen off a cliff. I see no other indicators of economic contraction. I don't know any businesses that are laying people off. I don't know anyone who's really slowed up significantly. And so, yes, I mean, the tech sector, which I think, to be fair, is the most inflated and bubblicious sector of the economy. They're seeing layoffs, yes, but when is that going to trickle down to the rest of the economy? I'm not seeing contagion. The tech sector only affects certain markets. It affects Austin, San Francisco, a few other places, Seattle. The tech sector doesn't mean a damn thing where I live. It has no impact on our economy. Facebook, or I'm sorry, Meta, can lay off as many, 20-something TikTok girls, with the fake title of product manager, that they can lay off as many of those people as they want. It's not going to affect the local economy where I am. Every restaurant is still packed. Every gas station still has, well, not quite a line, but it's hard to find a pump. Most gas stations, most of the time, unless you're there real late. It's still hard to get around, in all this new bumper-to-bumper traffic. I never had to deal with traffic in my life until the last year and a half or so. I never thought about traffic when I had to go somewhere. I never thought, I should, I'll have to leave at this time to make sure that I'm there in time because, the traffic might set me back 30 minutes. And this is all a result, of course, of the massive influx in population since the onset of the 2020 lockdowns. I've said this before on this channel. The more I follow and study the economy, both national and local, and not just my own locality, but other places around the country, the more complex you come to appreciate it to be. The less you feel like you fully grasp the situation. And I guess that just underscores why market prices are important, because we individuals will never have all the answers. We'll never really understand how everything works. I can't tell you how to build a wristwatch. I just know that when I put it on, it tells me what time it is. And I don't actually wear wristwatches. That's just an analogy. But my point is that economic data is compartmentalized. It's not something that we can, as much as we try to aggregate economic data, it's never really actual data. It's an abstraction. Economic data is about as useful as Vegeta trying to measure Goku's power level. What is the scale? What do these numbers mean? How do you measure these numbers? Nobody really knows. We just know that, bigger number good. Bigger number means more better. And so we have an entire economic manipulation regime predicated on trying to make the big number go up and be even bigger. So, with all that said, I'm still eagerly awaiting our economic apocalypse, and if anything changes on that front, you know, of course, I'll always cover regular Fed meetings. Fed Day is always going to be an event on this channel. But anyway, with that said, I will see you folks back here tomorrow.